You got stocks and you got real estate. And if we have them do battle with each other, and I'm in my clubhouse right now, they probably wouldn't appreciate if I broke these, but if these things did battle, which one is going to win? Which one is actually going to be better? There are 4 criteria that I think you need to be aware of when understanding the answer to this question. And what I want to do is give all 4 of them to you today. Now, I am going to warn you right now, spoiler alert, I'm all about real estate, right? I mean, hello, duh, it's my channel, and it's all about the power of mindset and creating wealth. And I don't know a faster way to generate wealth than through real estate because of a huge bonus component that I'm going to share at the end. But let's just start with the basics, right? There are 4 main considerations when it comes to stocks versus real estate: growth, market volatility, cash flow, and diversification. Now, I want you to understand, I'm not here to say that the stock market is bad in any way, shape, or form. I just want you to understand why I am a fan of real estate and what my beef is with some of the alternative investments out there. First of all, when it comes to growth, let's just take a look at the S&P 500, right? The S&P 500 is a collection of the top 500 companies that people are investing in the stock market. They're your blue chip companies. They're Apple and Microsoft. And the S&P 500 long-term is one of the best indicators of the US economy. It's also one of the best indicators of the stock market. Now, I'm going to tell you, since 1928, since the stock market came about, just shy of 10% is what this averages year over year. Now, you need to understand there might be a year of 20%, there might be a year of negative 30%. So you do want to understand that in stocks, it's not one of those games with the S&P 500 where you get in and get out and then get in. This isn't day trading. This is, if you're going to play, you got to play long term, which means in 10 years, you're going to what? You're going to double your money. 10% times 10 years is 100%. Real estate, I want you to understand, just like picking bad stocks, in the real estate arena, real estate, most people actually probably do 3 to 8%. It's accidental investors, it's investors that don't even know what they're doing. And I would say that that is somewhat typical for people. But when you add in appreciation and some of the big booms, people can even do over 10%. If you're playing real estate as an expert level, then for me, I'm averaging on my real estate somewhere around 20%. I just closed on 4 deals where I'm projected to make 26%. I've done another fantastic deal earning me 18.7%. I'm always over 15%, and I'm usually 20+%. This is compounding, and if you understand the benefit of compounding interest, this can compound. So for those that don't know what they're doing in real estate, the stocks might be better for you, but for those of you that get some know-how or work with an expert team, I got a team, for example, where I've helped thousands of investors. In the last 5 years, my investors have made over $70 million in real estate. So if you know what you're doing, real estate can be superior. 10% is nothing to squawk at. If you want to go to college, get a degree, work for somebody else for 40 years, and you're just doubling your money every 10 years, then here's the cool thing. 40 years from now, you can be sitting on a little pile of money. Real estate has a lot more potential, but this is a real option for people. Number 2, market volatility. Every 8 years, the stock market is going to see a correction. And if you're the long-term player, you just don't care. But if you were to enter the market with a whole pile of money, when would you want to do it? After the market tanks. When the market drops 20, 30%, you go in and that's when you slam down money, because statistically over the next 36 months, you will recuperate all that money back plus get some really great growth. The stock market has a corrective cycle every 8 years. Real estate has a corrective cycle every 15 to 20 years. And real estate's corrective cycle is based on supply and demand. Basically, the economy's going up, people get excited about the increased prices on real estate, and then they build more houses, and then people move in, and then they build more houses, and then people move in, and then everyone and their dog is building houses, and we ran out of people to move in because population hasn't caught up yet. And then real estate the bubble pops, and the market goes down, and then you got to wait several years before the population catches up. And eventually people are tired of living with other people and moving in and having multi-generational homes, and they say, I want to go buy my own home. And all of a sudden building starts happening again, and the market goes like this, but it is going up over time. So understand that real estate with the stock market, it will crash 100%. I have a strategy where I actually avoid that market volatility by buying my homes underneath the median, meaning $1 million house in a bubble crunch is going to crash hard. A $500,000 house is going to crash. A $300,000 house is kind of going to crash. $250,000 house is going to crash a little bit. $200,000 house hardly feels a bump, period. So most of my homes I buy are between $100,000 and $200,000, which is why in 2008, the last mega crash, my company and my real estate was growing head over tails. So here, you can't do anything to really protect yourself from the market going down. So the market is going to go down. And here, the market, you can actually get it to go flat and up instead of just up and down. So that's the difference there. Number 3, cash flow. The stock market is not going to be playing you cash flow. You might be able to collect on some dividends here and there, but for the most part, you're just throwing your money in and speculating that it's going to go up over time, so you really don't have that cash flow component. Real estate, on the other hand, depending on the market that I'm in, I'm usually getting a cash-on-cash return between 5 and 10%. Now, that's part of my 20%. What I want you to understand is I'm actually getting paid every month on the homes that I'm buying, and that is super attractive because my definition of an investment is something that pays me instead of something that doesn't. Lastly, diversification. In the stock market, the S&P 500, that's what diversification is. It means that you're investing a little in this company, and this blue chip company, and this one, and that one, and some are going to tank and some are going to crush it. But if you're investing in the most successful companies over time, they go up in value. So you have tons of diversification over here on the stock side. Real estate, you don't have the kind of diversification that you have over here. The diversification comes in not putting all your eggs in one commercial property or one apartment complex. For me, at least, I have a stake in several single-family homes in several different markets, and that's my diversification. Now, Warren Buffett did say this, Google this. He said diversification is for people that do not know what they are doing. To some extent, I have found that true in real estate. Don't get me wrong, I have some diversification. I do invest in some different things. I do some cryptocurrency, some commercial. But single-family homes, this is my jam, where I'm buying hundreds of homes personally every year, and I'm growing my net worth whether the economy is going up or whether the economy is going down. Now, I did say there was a bonus, so I am going to end with this. The last big difference between stock and real estate is that real estate can do something that stocks won't, and this is where I can literally add an extra digit, a third digit to what I'm doing over here. Real estate has this cool thing called leverage. And leverage done correctly is your friend. What is leverage? Dude, if I want to buy $100,000 worth of stock, I have to get $100,000 worth of stock, and I got to put $100,000 worth of stock in. Real estate. If I want to have $100,000 worth of real estate, I can put 20% down, 20 grand, and buy $100,000 of real estate and have that 100 grand grow the way that it does. Stock market, more or less, other than some options and puts, you're putting dollar for dollar in. But in the game of real estate, you have a huge game of leverage, which means you can start playing with a whole lot more money than you actually have. And that leverage, what that really does is when you start really crunching the numbers, this blows this out of the water. It's not that I don't like stocks. And in truth, I don't have any money in stocks. In good conscience, I just can't because I'm making way too much money in real estate. Doesn't matter if the market's going up or down. It's a strategy that works. By the way, if you want to know what that strategy is or talk to a member of my team that can actually lay it all out for you, all you got to do is click the link in the description below, and you can actually read up on my strategy. You can learn how I'm earning 250% higher, 2.5 times more than regular rentals, how I'm crushing it in the real estate game. And for those of you that are like, I don't know if I want to even learn real estate, but I want to passively make the money from it, like the stock market, I've got options on how to do that too. All you got to do is speak to a member of my team, let them evaluate your financial situation, whether you're starting with nothing or a lot, because I started with nothing, and they'll build a game plan for you and let you know exactly what your options are. And finally, if you are not a subscriber and you like this video, you made it to the end of the video, so you might be liking the channel. I produce videos like this every single day. In fact, if there's any topic under the sun on real estate, wealth building, and being successful in the mindset of the wealthy, you're likely to find it on this channel, and that's what I'm dishing up every single day. So make sure that you do subscribe, and I will see you on the next video.